Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading stocks, bonds, and crypto assets around the world. The greatness of human accomplishment has always been measured by size. Don't let them tell you size doesn't matter. Size does matter, and the bigger, the better. And big can always get even bigger in the stock market. This has been proven again and again by Nvidia, with AMD, even the AI GPUs. As Jensen Huang said, we need bigger GPUs. Today is Nvidia and Snowflake's big earnings day. I am going to touch on both of these companies' numbers. I will also speak about the elephant in the room. If you're wondering whether AMD can keep up with Nvidia at all, why have both AMD and Snowflake stocks been a total disappointment this year so far? Of course, I will compare Nvidia with AMD to show you the brutal truth. We also have Warren Buffett buying Pool Corporation. Was that a good buy right now? Lastly, I have to tell you reasons why it's a bad idea to buy stocks by simply following Buffett. No more, let me explain.
Why is Nvidia bigger than ever? Despite rising competition, Nvidia holds 80% of the fast-growing market for artificial intelligence chips. As the tech industry's GPU choice of making and deploying generative AI software. What investors will want to see when Nvidia reports its third quarter earnings today is whether it can continue to grow at a fierce rate, even as the boom in AI enters its third year. Nvidia is entering the uncharted territory as it attempts to continue growing on a $3.5 trillion market cap. We have pondering this amazing growth trajectory, and not only do we see no sign of slowdown, we expect further upside in 2026 data center momentum, said an analyst who has a buy rating on the stock.
Future growth will have to come from Blackwell, its next generation chip that has just started shipping to end users such as Microsoft, Google, and OpenAI. Nvidia CEO Jensen Huang will likely update investors about how that is shaping up, and he will potentially address reports that some of the systems based on Blackwell chips are experiencing overheating issues. In August, Nvidia said it expected about several billion in Blackwell sales during the January quarter. Our base case is for Nvidia to ship 100,000 Blackwell GPUs in fourth quarter, which we believe is near the low end of investor expectations. Raymond James analyst, who has a strong buy rating, said, since Nvidia's last earnings report, the stock is up nearly 19%, capping off a stunning run that has seen the share price rise eightfold since ChatGPT was released in late 2022. Alongside the stock's rise has been a fierce increase in sales and margin, and its forward price to earnings ratio has expanded to just under 50. Growth is slowing, but that is partially because Nvidia's top line is so much larger than before. Nvidia reported 122% growth in sales in the most recent quarter. That was lower than the 262% year-over-year growth it reported in the April quarter. Analysts are expecting around $33.12 billion in revenue, which would be nearly 83% growth compared to a year ago.
The company is also expected to post 75 cents in earnings per share. Nvidia data centers business accounted for nearly 88% of sales in the most recent quarter, taking the focus off the company's legacy computer games business. The company makes the chips for Nintendo Switch, for example, which the Japanese video game company says is seeing major sales decline as the game console ages. Nvidia's gaming business is expected to grow about 6% to $3.03 billion. Its automotive business, making chips for electric vehicles, is still small, even though analysts expect it to grow 38% to about 360 million in sales. But none of that will matter as long as Nvidia's data center business continue to grow at a rate that is nearly doubling on an annual basis, and Huang signals to investors that the party won't ever end.
We have Jim Cramer talking about Nvidia in light of a report that the company is having overheating issues with servers for its newest graphics chips that enable advanced artificial intelligence functions.
Minutia. Minutia can shake you out of tremendous investments every time. Let's talk about what happened to the world's largest chip maker. Let's talk about Nvidia, which reports on Wednesday. Now, Nvidia is normally pretty open about its business, but like all companies, it has what's known as a quiet period that starts 4 weeks before the company reports its earnings. If there's something that very much impacts the earnings, management is not supposed to answer any questions about it during the quiet period, even if it knows the answer. It is always respectful of it, and you need to know that. Now, Nvidia reports this week, so it's in the final days of this quiet period. That means any news disseminated this week that could impact the company would put Nvidia squarely behind the 8 ball. Everyone knows that you can really throw off any company and its shareholders by injecting uncertainty. Sure enough, this weekend, a publication called The Information said that Nvidia is grappling with what it called, quote, new problems related to its much-anticipated Blackwell graphics unit for artificial intelligence, end quote. The machines are big, they are powerful, and by Nvidia's own admission, they run hot. The problem occurs when they are connected together in a customized service rack.
But Cramer wasn't overly concerned, saying he views the stock decline as an investing opportunity. Maybe this time really is the top, and it's all because of server meltdowns, he said. I'm more inclined to think you're getting a buying opportunity in Nvidia thanks to the information publishing a story that may simply not be that. The information reported that Nvidia highly anticipated Blackwell's chips overheat when connected to custom servers, and it had asked suppliers to change server rack designs several times, causing some customers to worry about shipping delays. Nvidia said GB200 systems are the most advanced computers ever created, and the engineering iterations are normal and expected. CEO Jensen Huang has previously said that demand for the chips is insane. It's worth pointing out that AMD was making $0 on these data center GPUs just 1 year ago. So building a multi-billion-dollar business that competes directly with Nvidia in 4 quarters is an incredible achievement. That's what I am still betting on.
So here's the brutal truth. The problem with AMD is that it's always too little, too late. AMD released MI300 chips more than a year after Nvidia released the H100, which means the biggest cloud server provider and supercomputers were already reserving Nvidia's H200 GPUs by then. Challenge is that Nvidia's Blackwell GPU are coming out in a few weeks, and remembering Blackwell isn't just a GPU, it's an accelerating computing platform. AI chip based on the Blackwell architecture will go into self-driving cars and robots, not just data centers and supercomputers. Blackwell is also 4 times better at AI training and a whopping 30 times better at AI inferencing than Hopper. That massive leap in performance gives Nvidia a lot of pricing power, which is why they have a whopping 76% gross margin, while AMD margins are only at around 50%. That's pretty big difference time that AMD has an answer to the B100. Nvidia will be closing to launching their already announced B200 chips.
So one of the biggest risks for AMD is that Nvidia releases new chips almost twice as fast as them right now. Another big risk for AMD is spreading themselves too thin. I mean, there are too many declining businesses in AMD right now. AMD makes CPUs and GPUs for gaming PCs, custom chips for video game consoles, and has a big embedded chip business. This doesn't make AMD a bad company or a bad investment. It's just not a pure play on AI. This is why AMD stock is not going up like the rest of the pure play AI companies. Lastly, let's talk about Pool. No, it's not Deadpool. Pool Corporation shares dropped under $300 in early July, well below the $570 plus peak they touched in November 2021, which may have prompted Berkshire to buy in.
The wholesale distributor of swimming pool equipment, parts, supplies, and related products generated $5.5 billion in net sales and $523 million in net income last year. Sharp declines from the previous year. The result is that Pool Corporation sits firmly within the Buffett's circle of competence, which he keeps in mind to ensure that he only invests the things that he understands. Speaking of the stocks he probably doesn't understand, Snowflake stocks is one of the stocks that Buffett bought. The problem about Snowflake's business is that they essentially have more people in sales and marketing than they have in engineers. First of all, their TAM is only growing 2x inside 5 years. I mean, that's not a very big growth trend. Next, revenue growth has been slowing down to 28% in the most recent quarter. That doesn't mean anything if there's no profitability to grow with it, because any company can throw money to a room full of salespeople and increase sales. However, the sales growth is slowing down. Also, the revenue net retention rate is declining too. I think they're hiring way too much employees, which costs unprofitability dramatically, which is why the stock price has been suffering this whole year. So I will not follow Buffett to buy any stocks from here on now. No more.
Thank you for watching, and please give my video a like and subscribe.